Hello everyone, how are we all doing today? In this quick educational video, I'm going to go over how to utilize multi-time frame analysis in your trading. This question I get a lot by many of you guys, and really want to make a video clarifying all the information that I know of on multi-time frame analysis and how I utilize that in my trading career and what has helped me to be a better trader by utilizing multi-time frame analysis. So, as always, any questions or comments, let me know below, and I'll get started. So, it's important to understand that multi-time frame analysis is what it does is it give us more clarity on what the overall market is doing from a higher time frame approach, from a top-down approach. All right. So personally, I would always start my analysis from the higher time frame. So, starting from the monthly, dropping down to weekly, daily. This is what we usually call as the higher time frame because you're seeing the overall kind of price condition, what the market is doing. You're seeing the overall trend and overall kind of the market direction. And it's really important to start off from a higher time frame because it's going to weigh heavier on your analysis, right? And by understanding what the higher time frame is doing, then to capitalize it is to going down to the lower time frame to look for possible entries and to confirm that your higher time frame bias is also correct because you're seeing the same bias on the lower time frame. All right. So understand also that price action, okay, price action and structures, they work interrelated to multi-time frame analysis. Okay, for example, we understand that in a higher time frame impulse, so we understand a higher time frame impulse such as this in the impulsive phrase, there will be many lower time frame impulses and corrections. What I mean by that, so higher time frame is just one big impulse, one big massive movement. But if we go down to the lower time frame, if we go down to the 1 hour chart here as an example, so this is the same move that we see on the higher time frame. But if you notice, there's going to be many corrections in there, many impulses, many corrections. Okay, and this is what multi-time frame analysis tells you is that although on the higher time frame it's just one big impulse, right? With very clearly, but on the lower time frame, you're going to have impulse correction, impulse correction, impulse correction, impulse correction, impulse. Okay, the key here is to really understand that when you can properly understand that in a higher time frame move, there will be many lower time frame impulses and correction. When you really finally truly understand that, that's going to help you your trading a lot more. Okay, let me give you an example is that when you can properly understand what the higher time frame is doing, you understand that higher time frame when it's in a corrective phrase is not going to move too much because price is moving very consolidated, it's moving very correctively. But if you can understand that you're forecasting, you're making analysis, you're looking for the next higher time frame impulse, you understand that clearly. And the key here is to go down to the lower time frame. This is the 1 hour chart now. You go down to the lower time frame and look for possible entries. Why? Because you understand that from a move from a higher time frame, you can capitalize it by going down to the lower time frame and look for possible entries. This way, your risk reward is greatly increased. You can enter a trade with a tighter stop loss, and your reward is so much more compared to if you enter a trade on a higher time frame. Okay, as example, if someone was to swing trade, someone who's a swing trader, who's trading more on a daily, weekly level, they might be entering a trade like this, and then because we're on a higher time frame, they might set a very generous stop loss right to the bottom of this overall structure. They're making about 2.7 to 1 or so, or 3 to 1, whatever how they adjust the stop loss. But that's a perfectly fine swing trade, right? But we understand that from multi-time frame analysis, within a impulse on a higher time frame, there will be many impulse, correction, impulse, correction, impulse, correction to bring down the move. So to fully capitalize on multi-time frame analysis is to go down to the lower time frame, go down to the lower time frame and look for continuation correction because you already have the bias that the higher time frame is going to be in this bearish move. And simply going down to the lower time frame looking for the entry is going to give you the maximum risk reward. So as example here, if I was looking for entry here, even with a very generous stop loss, depending on how the correction will go, you can see that the same target, same entry, you almost triple the size of the profit because you understand that on the lower time frame, the entry is the same. A higher time frame move will happen. It's just how you get into this higher time frame move. Are you getting in from a swing trade point of view, and you're looking for a pretty large stop loss, or you understand multi-time frame analysis? You understand that on the lower time frame, you're going to be looking for the same entry, regardless of what happens. But it's just going to give you so much better reward in the long run. Okay, and that's really important. That's really the key difference, in my opinion. Multi-time frame analysis has changed me or changed my analysis in trading overall. Okay, and in addition, that again, combining multi-time frame analysis and price action structure, it will give you a clarity of where the price may go, right? Remember, when we're looking for the entry, you're gonna also think about where your target might be, right? We understand on the higher time frame, we're in this overall ascending channel. So a good rule of thumb is looking for the bottom of the structure, the bottom of the previous low as a first potential target, right? So on a higher time frame, you understand that this move is likely to go. So you're looking to take profit here. But how to actually understand that and how to really look for that? Well, let's just say that this move already happens. We're at the bottom of this overall structure now. And higher time frame wise, we understand that there is a possibility that price can just break out of this ascending channel and then just continue lower and lower. That's very possible. Judging by the price action, we see these ascending channel, we see the structures over and over again, right? You're going to see them over and over again, and they're always going to give you that clue once that correction finishes. Okay, so there's a very good chance that the current correction that we're in, that we can see that push out of this overall larger structure. And how to understand that? And again, going down to the lower time frame, understand that if this move is going to continue downwards, it's likely to form a correction here, or if it breaks out, it's likely to form a correction here. And that's why going down to the lower time frame, guys, is super important. You're going to look for that continuation correction. You're looking for that. You're waiting for it. That's going to give you a clue whether or not you should hold the trade to continue downwards, or if we're going to begin seeing some reversal structure, reversal correction at the bottom of this higher time frame structure, then that is a clue from the market again, telling you that this move can potentially reverse up now, and you should definitely take profit somewhere here because price is likely to go up once more to the top here and then still dropping because higher time frame structure still valid. All right. So that's why it's very important to utilize multi-time frame analysis in our trading because it's going to give you much more clarity, much more clue on where the price may go. Okay. And again, higher time frame, you're going to always want to start from the higher time frame, right? Understanding what you're looking for, and then going down to the lower time frame, looking for possible entries, looking for possible targets, looking to see what the price will do at a key area. Is it going to continue lower, or is it going to reverse up? And that's a signal or that's a sign from the market that you should take and understand that that's when you should get on the trade as well. All right, everyone. So hope this explained multi-time frame analysis from my personal experience and my knowledge on it. And any questions you guys have, let me know below. And I will chat with you guys next time in my next daily outlook. All right. Thank you very much.